Hi, welcome back. I'm Ted Thomas. Now, I've been involved in the tax lien certificate and the tax defaulted business for a little over 25 years. Now, in this episode, I'm going to cover tax sale made easy. I'll cover up a couple of other things too, so you have some ideas. I'll talk about tax liens, I'll talk about tax defaulted property and deeds, and I'll show you some mistakes that you just don't want to make, and I'll cover those towards the end. All right, so let's get going. This episode is all about tax sale investing made easy. Now, if you're going to buy tax lien certificates, you can buy those certificates and earn 16, 18, 24, all the way up to 36% interest. But I think you guys are really after tax sales, which really are when they sell the property. Now, the official name for that is a tax defaulted property, and all the counties across America sell tax defaulted property. Now, all private property is taxed. Now, why is it taxed? Well, that's what keeps the government going. Actually, every property is taxed except schools and churches. Otherwise, the property is taxed, and when it is, that's the money that runs the government. So what really happens is the legislature of the state creates a tax entity, and that tax entity is called the county. The county has a treasurer, and the treasurer has the job of levying the taxes, collecting the taxes, and then finally, if you don't pay the taxes, they confiscate your property or they sell a tax lien certificate. So all owners of property are required to pay tax. The money is collected by the government, and the money is usually in the 1% to 2% range. So a $100,000 property, you could think $1,000, $1,500 tax each and every year. Now, if the property owner doesn't pay the property tax, one of two things are going to happen. They're going to sell a tax lien certificate, or today we're going to talk about they're going to sell a tax deed. So what really happens before they sell the tax deed is the county comes along and said, you haven't paid your taxes. They send you many notices. Some of them are even delivered by the sheriff. It's not some local person selling this property. It's the state is telling the county, you must sell this property, collect the taxes, and make sure everybody pays taxes. All right, so we have tax lien certificates, and we have tax defaulted property. Now, tax deed means tax defaulted property. Okay, now there's nothing benevolent about collecting these taxes. They are going to collect the tax. So if you don't pay your tax on a property, they will sell the tax. Now, how do you make out? Well, you make out very well, because when the county seizes the property, they take the money out, and they've sold it, so they take the money out and pay the bills, and then they go ahead and sell the property. And when they sell the property, they usually sell it at very close to the back taxes. So let's say it was a $100,000 property, it would probably be for sale for $5,000 or $10,000. Now, that doesn't mean you're going to get it for that, because there's going to be other people who will show up at the auction. But when they sell the property, it has no mortgage on it. So now you get a $100,000 property, starting bid $10,000. You can see there's a lot of margin in there. All right, so that's a beautiful thing. Now, with the tax lien certificates, they don't work that way. But right now, we're really talking about tax sale investing made easy. So tax sale could be a tax lien certificate auction, but today we're talking about a tax defaulted auction where you would get a tax deed. All right, now there's 3,000 counties across America. Now, that's plenty of counties, let me tell you. All of those counties will have at least one tax defaulted auction every year. Now, some of those counties will just do it every single month. For example, I live in Florida, and I know, for example, that in Orlando, that's Orange County, what they do there is they have an auction about every 10 days or every 2 weeks to whatever properties that they have confiscated. They just sell them at auction and pay the money to the county so the county can pay their bills. So you're getting the idea. So they can do it every 10 days if they want, or a place like Miami, they'll wait until year end. At year end, they might sell 150 or 200 properties. So that'd be a really big auction. So the little auctions are kind of easy because you can go there and watch. It'd be something you could take in yourself on a regular basis. And it's all in between that. So you can have some small auctions. By that I mean just a few properties, so only a few bidders will show up, or a big auction where hundreds of bidders will show up. For example, in Los Angeles, I've been there many times, and they'll have over 1,000 people at the auction, but they might be selling 2,000 properties just in that county. I'm not talking about the state now, just talking about Los Angeles County. All right, now what's happening to all this money? Well, the county has to fix the roads. The county has to pay for the court system. The county has to pay the school teachers. So all this money that's coming in is paying It's really the lubricant. It keeps the government going. It's the wheels turning all the time. That's what keeps it turning, is that money that's coming in. So the state requires the treasurer to do that work, levy the tax, collect the tax, and confiscate the property. Then when the money comes in, when they sell the property, that pays all the county's bills. And how do you make out? Well, tax sale investing is really easy if you show up at the sale and buy the right property. Now, my suggestion, you just walk in the door and start buying? No, I would suggest you get educated. You'd like to know how much the property's worth. You'd like to research the records on the property. You'd like to make sure there was no other liens on it. You'd like to make sure that it was resaleable. You'd like to make sure the condition and so on. All that's going to take a little time for you to learn some of those things. Now, the auctions, you can go to those. They're free. They don't cost anything. You can show up there and watch and watch and watch. And if you want to do it that way, you could do it that way. Average person could learn this on their own. How long would that take? Probably 1.5 to 2 years to learn it. Or you can come to a class and we can teach you a much easier way to do that. Now, I'm going to cover a couple of questions, and then I'll move on to some things I promised. And I'm glad you hung in there, because now I'm going to show you the mistakes you don't want to make at the auction. But first, we'll answer those questions. Okay, so the question is it better to start with online or offline? Well, offline, it's nice because you can go there and watch the auction. I feel real good about that. Well, of course, you can go and watch the online auction too. I like the offline auction because I can go in the room and kind of get a sense for it. Now, in the small auctions where they're only selling 25 or 50 properties, you'd get to see a lot, and more than likely, the auction would be conducted by a county employee. So someone from the county would get up from their desk and come out and auction off properties. That happens all the time. But on the big auctions, and if it's a live one, they're going to have an auctioneer there running that price up as high as they can get it so they can get as much money. So that one's going to go so fast you'll have trouble keeping up with it. So it's up to you which one you like the best, but I'd definitely go and watch the online and the offline. Okay, so what's the minimum amount at a tax deed auction where you're trying to get the property? Well, certainly don't go there with $5,000 and expect to get $1 million property. That's not going to happen. There's going to be other people at the auction, and they're somewhat competitive. But the educated buyers are the ones that always make all the money at these auctions. All right, here's the point. You can go with a small amount of money, but you're probably going to, if you only had $5,000 and you could buy for 10 cents on the dollar, the biggest property you're going to buy is something valued at $50,000. Now, what's $50,000 in Modesto, California? It's probably a driveway. Okay, what's $50,000 in the south side of Miami? Well, that's probably a little 2-in-1 that was built 80 or 100 years ago that's got the roof kind of sagging in. It's going to be different in every part of the country. Now, there's plenty of properties. One thing about this business, it's a business of abundance. There's always too many. All right, well, it's time for me to button it up. So here's how we're going to button it up. There's 2 big mistakes that you need to learn to avoid, all right? Mistake number 1, and this is at the auction, is do not buy any property that you haven't looked at. Now, when I say looked at, that means looked with your eyes or had your boots on that property so that you know what you're buying. Now, there are people that will buy and not know what they bought, and then they're going to be very disappointed when they get there because maybe there was a big windstorm or there was a hurricane and it blew the property away, or it flooded the property, or there was a fire. All right, so any one of those things could happen. So don't buy anything that you haven't seen. Now, the second biggest mistake, this happens all the time, is we have many people are eager at the auction. They're eager, they're excited, they're committed, they want to make money and make this thing work. And what they do is maybe someone bought the first property and paid them a little bit more than they could afford, but now they see a second one on the list, but they haven't looked at it and they haven't established an exit strategy. Folks, don't buy a property if you don't know what you can sell it for. If you pay too much money, how are you going to sell it? And it happens every single day at auctions. People are buying things that they've never seen. You'll go to the auction and have someone in the row where you're standing say, okay, Gladys, let's go see what we bought. Well, that's insanity. They don't know what they got. What if they bought a sewer? What if they bought a property next to a chicken farm? How'd you like that? Or maybe a pig farm or something like that. You don't want to do that. You want to make sure that you've looked at it and you have an exit strategy for that property. Well, thanks for waiting this long and staying with me. I appreciate you being here. And what I'm going to do now is I'd like to invite you to be a subscriber, and you can do that right below me when I finish. And if you do, I have a quick start home study course that you'll be delighted with. Teach you the secrets of tax lien certificates, teach you how to make big profits in tax foreclosures. Those are called tax deeds, like we talked about. All right, that's free. I'm going to give you that. It's my gift. All you have to do is register below. I'm Ted Thomas.